Hey guys, today is April 17th. Tomorrow is April 18th, Thursday. Keep in mind, the markets are actually going to be closed Friday, so make sure if you're trading weekly options to close your positions tomorrow on Thursday. Now, this sector is about to drop. Guys, there's 3 stocks I'm going to reveal in this video that literally are going to drop tomorrow and will likely to continue to drop over the next 30 days. This video is specifically for active day traders and swing traders who are trying to understand how to identify the tops on the charts and use it to short stocks. So we'll actually take a look at specific case study of multiple charts. We're actually going to do a quick follow-up on the panic video. We're going to do a quick follow-up on the Netflix trade that was posted yesterday. Guys, here it is. First, I'd like to ask you a question. I'm going to show you 2 charts. Here's chart number 1, and I'd like for you to either write down or to just mentally answer this question. What do these 2 charts have in common? So here's chart number 1. Let's not worry about what stock it is for now. I'm going to tell you in just a second. But what do you observe in this chart? And guys, for those of you that are brand new, just do your best, okay? But for those of you that have taken the charts and diversities course, guys, hey, this should be easy. This should be super easy. So take a look. This is chart number 1. What do you observe on this chart? Here's chart number 2, and the goal is to identify the similarities between these 2 charts. So this is chart number 2. Again, I'm going to switch back to the previous slide. Chart 1, chart 2. I hope you've got those answers in your mind or on paper. Pause the video if you have to. Okay, now here's the answer. The first stock is actually Humana. As you can see, the similarities between the 2 charts is multi-top formation. Top 1, top 2, top 3, top 4, followed by a bearish reversal candle. Notice where the thin tail of the candle sticking out right here. We also called it the failed rocket launch in our course. So this is a sign of a reversal right here, especially when it coincides with the diminishing RSI. As you can see, as it hits these multiple tops, the RSI, the strength for the stock actually keeps going lower. Another similarity between the 2 charts I have just shown you guys is they're both pretty damn bullish. I mean, look at this, both of them. Every time this thing dips, what do? They come in, they buy. It dips, they buy. They keep running the thing higher. Both of these stocks are actually trading above the blue line, right? Not only above the blue line, but above the orange line, which is super bullish, okay? So it's nice, beautiful uptrend in the chart of Humana. The second stock was Workday, ticker WDAY. The same thing, trades above the blue line, trades above the orange line. Every time it dips, what do? They buy the stock. They keep buying. You see, every time it dips, they keep buying. Multi-top formation, top 1, top 2, top 3, top 4. What do you have here? You have a candle. The magnitude of that tail is not as significant as in Humana, but the structure of the candle is the same. You've got the wick of the candle sticking out right here. Failed rocket launches, basically shoots higher and it fails. You've got diminishing RSI. Look at the strength of the stock actually going lower as the stock continually tries to break out of this range to go higher. Very similar stuff. I want you guys to really, like, if you have to print it out, post it on your fridge to just make sure that you understand that this is a top. Make sure when you look at these things, you understand this is a top right here. The most important thing is to understand what happens next. Now, if you've been paying attention to the markets the last few days, you know that the healthcare sector has been a total dog. I mean, it's hitting some lows at the rate. It's not even the fact that it's hitting the lows for the year, but it's the fact that the speed at which it is doing it. I mean, healthcare stocks normally don't drop like technology stocks. They don't drop $10, $20 a day. But yeah, that's exactly what they were doing. So as you can see, this is again the stock of Humana. So this is where that candle was, the candle that I was just showing you on a different time frame. Look what happens next. So it dives for like 4 straight days, 5 straight days. The bottom line is, here's your 1, 2, 3, 4, 5 top. The candle, boom, drops, bounces back to the blue line, and what happens next? Guys, Boom. This is what they're talking about in the news in the last few days. Okay. Now, we've been able to predict the top in the healthcare sector because we observed that while the entire market was dropping in October, November, December, this is the only sector that was actually able to sustain gain. And at the time, the entire investment community was putting money in healthcare stocks and utility stocks because of the expectation of the high interest rate. Now that the environment has changed, we're seeing exactly the opposite. So how do you use this information to your advantage? So anytime you see this, get ready in the near term to see this right here, guys. And it doesn't matter which stock it is, right? What we're looking for, because chart patterns, they're highly repetitive. So if you understand how to identify the top, you will be able to position yourself properly. Because what you would have heard here, if you were listening to CNBC and other media channels, they're saying, oh no, institutions keep putting money in healthcare. They keep investing. This sector is going to move higher. While in reality, we have clear signs of the top. So what you hear right now is, oh no, cloud stocks are the best. Keep putting money in it. While the top is already forming. So with that being said, I'm going to show you 3 more examples of the top. So actually, this one we have just reviewed, right? That's Workday, currently trading at 195. This was our trading idea in the 13 market move subscription. I have revealed this idea as shorting Workday back maybe a week ago in the video I posted that was titled Panic. Now, it was the time to panic, and especially those guys that didn't just jump all in. I mean, if you're still holding this position, it's about to become highly profitable, guys. Okay, because the big drop is just about to happen. Just remember, when these tops form, they do take this sweet time to form sometimes. So instead of just buying your weekly options that expire tomorrow, okay, it makes sense to diversify your position. Yeah, you can buy some options that are expiring tomorrow, but don't just, put your entire amount that you're planning on spending in the trade in options that expire tomorrow. Buy the following week as well. And when you get some clear signs, like based on our 13 market moves formula, we don't commit a ton of capital until we get a high probability sequence. So if you haven't studied the 13 market moves, guys, hey, do this. Click the links below. Get more information so you would know when to strike with a larger amount when it really matters. Bottom line is this. Just because after we post the panic video, initially this stock went higher a few dollars, okay, does not change our view that we're bearish on Workday. Okay, the big drop is going to happen, and it is going to begin happening tomorrow on Thursday, April the 18th. Now notice in this video, I'm actually telling you specifically when we expect the drop. Why? Because earlier in the panic video, we noticed that the top was forming and it was time to start building your position. If you watched multiple videos we have posted here, if you've gone for any of our programs, we never recommend jumping all in and accumulating your position all in one shot. You always want to stair step, especially when we're dealing with the tops. So I've had some comments to ask me to bring some clarity of how you would have traded the panic video, and I'm going to give you some more insights at the very end of this video. But just remember, just because the top was forming, you don't want to just commit your entire, account. You certainly don't want to jump all in. And when you consider in place in the trade, consider, because of the low VIX environment, actually getting some positions with longer time frame, number one, and getting different strike prices. Okay, some closer to the money, some a little bit more out of the money. But don't just buy. I mean, I've had one guy that he's like, man, it was the panic. I went ahead and bought a ton of stuff out of the money, expecting the big crash the next day. Guys, that's not what I said in the last panic video, right? I said, look, the top is forming. As a matter of fact, the title, if you look at the video, it says signs of the top. So just remember, when we're dealing with the tops, they could be time consuming. Okay, but you have to be ready for them because you don't want to miss the move, because right now things are still looking bullish. When you're looking at this chart, everybody still talks about how all these cloud stocks, they're moving higher. So let's take a look at some other charts right here. What stock do you guys think this is? I did mention it in the other video. So if you've been paying close attention, guys, I always have some guys that, follow this information I post and they make money. I also have some guys that follow this information, they complain. Okay, what is the difference? Same information, right? Well, the difference comes into the way you execute. You know, the difference comes in the way that you answer this position. You know, what strike prices you're getting, what expirations you're getting. Okay, so if you're not having as great results as some other guys, I promise you, all you have to do is get more information so you can get better. Click the links below, take some free training. Okay, go for a few of our courses so you would be able to capitalize on these phenomenal market opportunities that we're facing here. So what chart is this? Guys, this is CRM. And same thing, right? It's another cloud stock. Okay, it will drop further. Okay, 1 top, 2 top, 3 top, 5 top. Look, it's trading above the blue line. It's trading above the orange line. There's clear signs that the sell-offs come in at higher volume than when they're buying the stock. I know it's institutional stock favorite, which makes it like crazy to even talk about shorting this thing because everybody's so in love with CRM. Okay, but it makes sense. Why does it make sense? Because I crossed this out, guys, for a reason. It does not matter what stock it is. It doesn't matter if we're dealing with the worst stock in the market that everybody hates right now or with the best stock in the market, let's see, like Amazon. If the chart points to a top, it's a top. So try to like really close your eyes and just really zoom in on the chart. So this is CRM. CRM currently trades at 155.58. This stock is heading lower. Why? Because of the chart. The chart points to a top. Now, here's another one. Trades at 128.66. Top 1, top 2, top 3. Diminishing RSI. Huge sell-offs on huge volume on the sell side. Okay, guys, this is another stock that will trade much lower from here. Okay, so I just given you 3 stocks. And specifically, I'm going to break down the Workday because we've talked about this more than anything else. So, Workday target in the next 72 hours. Okay, 182. 182, guys. And, you know, if you wanted to hear the breakdown of this trade earlier, we actually, this morning, this was one of our top trading ideas for this morning was shorting Workday, buying the 190 puts. And so, at the time I took the snapshot, it was at 195. I think it closed around 191. So, you know, our subscribers that took the trade, they're making money. Okay, and if you guys are wondering how to understand the charts, how to get our daily analysis, you can go to the website, tradingoptionslive.com. Click on 13mm daily. Okay, that is your daily analysis video that you'll be getting every morning. Telling you about the 13 market moves formula, how to utilize it. Telling you about what trades we're considering. Talking about specifically what are some things that we're paying attention that could impact the markets tomorrow. $162 in next 32 days. Guys, this chart is going to look like this. It's going to drop initially, pop a little bit higher, and then drop for good. Okay, so we're targeting these levels easily, about $162 in the next 32 days. So the bigger drop is in the cards here. Now, quick follow-up on the Netflix trades. Okay, we reversed the trade. I know some of you are probably going to give me a lot of shit in the comments, which is fine. I welcome any comments, guys. But the bottom line is this. We reversed the trade. And the most important thing is to understand, when would you actually want to reverse the trade? So if you're initially jumping out with the calls and you start to make a little bit of money, how do you know when to actually get out? Well, in this video, again, it's mainly devoted to studying the charts and the tops. Look at this candle right here. Okay, look at this, the formation of the candle. It's got this tail sticking out, failed rocket launch. In other words, it moves higher, and then it fails, and it drops. I got it covered up a little bit, but you can probably see this, right? The diminishing RSI is present here, and we're actually getting the confirmation that as the stock was going higher, we got huge volume on the sell side. They were coming in and taking profit. So the trade was temporary profitable when the stock made the move. If you want to take a closer look, we did recommend buying calls. Okay, so the stock we predict was going to open around 360. And if you were to buy calls, right, it did go to almost 365. So if you did buy calls, your trade would have not made you a ton of money, but you would have locked in a small gain. The question is, how would you have known to get out? And here's the thing. You could have made 2 very simple observations. Number 1 is when this drop happened, which by the way, by the time I was recording the video, it was trading right here because I was recording about 6:30 in the morning. And so after that, Netflix actually went higher for all the reasons stated in the video. But then when the market opened, it started selling off. Now the sell-off, observe this candle right here. The sell-off was happening in much stronger volume. Now when it started moving higher, okay, look how the volume just continually started dropping off. That is not a bullish sign. So look at the formation of this candle, right? If there's anything you guys can learn from this video is the formation of a bearish reversal candle. So the cool thing about these charts and charts observations, and you can use them on different multiple time frames. Guys, so if you don't know anything about charts, guys, you've got a very powerful foundational course that talks about charts divergences, how to read them. Guys, you know, even if you're a brand new, even if you're advanced, I guarantee you'll be able to learn some really cool stuff from the course. But for the purpose of this video, focus on the formation of this. Okay, it's another bearish reversal candle, failed rocket launch. So you can pay attention. This is actually a shorter time frame chart, but you would be able to pick this up that the stock is moving higher and lower volume. It's forming this bearish reversal candle. Now, very important, it does not guarantee that you would be able to get out right at the top at about 364, 365 level, okay? Because by that time, the candle would have not been formed yet. But you would be able to get up pretty close to the top by making these two simple observations. As you can see, right after that, it dips, and then it tries to make another run high. And what do you have? Consecutively have another bearish reversal candle. That was your signal to get out. So for those that are subscribers, we actually sent out the message saying, hey, we are reversing Netflix position because there's clear signs that this is a top. And if you take a look at the longer time frame, okay, like the daily chart, it is confirmed again by the MACD, which were some of the bearish reasons discussed in the very first Netflix video we posted in the last 72 hours, and then the confirmation that the accumulation is coming in and moving lower. And clearly, by studying all the tops, what do we have here? Top 1, top 2, top 3, top 4, confirmed. Confirmed, guys. So when this is confirmed, you want to reverse. When you're trading weekly options, when you're trading, you know, short-term expirations, you have to be reacting to the markets very, very rapidly. And you have to know what signals and what to look for in order to get out, cut your positions, or continue to stay in them. Okay, now there's one cool thing that I'm going to jump into real quick. There's no chart here, but we've been saying about accumulating BABA position, which is very interesting because what they're saying everywhere is Chinese economic data is improving. So that would be actually a reason for the Chinese stocks to go higher. Well, what happened yesterday when they made these announcements about improving economic data in China, Chinese stocks did not react. They did not go higher. Okay, they barely moved. And so that is another confirmation, a divergence, if you will, because they technically should have gone substantially higher, but they didn't. And so when stocks don't go higher on good news, that by itself is another confirmation that things are about to drop. So quick follow-up on the panic video, guys. I want you to, if your mission is to get better, I want to give you a few pointers here that I think will help you get better. So number one observation, when we're talking about tops, okay, they take this with a time to form. So be very careful when you're trading weekly options, okay? You don't want to just buy the next day expiration. You don't want to just buy options on Thursday, they're going to expire on Friday. If you are going to do that, only allocate like a small portion of the trade. So let's say you're trading with $1,000, you know, out of your, you know, $20,000 trading account. Just use $1,000 to the trade. Allocate like $300 towards the ones that expire tomorrow, and then allocate, you know, $700 towards the ones that expire next week. Okay, just remember that tops take time. And even though some of these moves lower, when they do happen, they can come in very, very fast and very, very fierce. By splitting your trade, whatever the amount that you allocate to your trade, by splitting it, you know, in two ways, some that expire this week and some that expire next week, okay, you're going to make sure that you're actually going to be able to nail the trade. Number two, stair-step into trades, never in one shot. So, for example, I had a comment from a few people saying, okay, well, you said Workday was going to drop, and then the next day it actually went higher. Okay, fine. So what do? If you've got a case that you have built that something is ultimately going to drop, okay, just when you get into the trade does not necessarily mean that it's going to drop the moment you get into the trade. And as a matter of fact, you should not be expecting that the moment you get into your trade, it's going to immediately start making you money. Yes, sometimes it will happen. And I'm pretty damn good at nailing some of these moves. But what's going to happen more often is sometimes the trade will go against you. So if you're just jumping into the trade with one big shot and it temporarily, notice the key word here is temporarily, the trade goes against you, okay, a lot of traders, they actually jump out of good trades. And in order to avoid that, the only way I know how to do it is to make sure to stair step into the position. So, you buy 10 contracts, the stock moves against you. If everything, all your calculations are still there while you're shorting the stock, then this is not a time to get out. This is actually a time to stair step into it. In other words, add some more to the position. So for those of you that have used that strategy, you've studied our material, guys, this trade, you're profitable in this workday trade. You got in at 190, you added at 195, you've added at 196. Now the stock is back to 191, you're profitable. And it's about to finally make this bigger move lower. So do not just jump out with big positions all at once. Okay, stair step into these trades, guys. Okay, number 3, consider various strikes and expirations. We just discussed that, right? You want to, in a low VIX environment, you want to buy stuff in the money or near the money. But as we're transitioning from lower VIX into high VIX environment, let's say VIX has been steady around 12, 13. If we break up out about 13, 14, then some of these out of the money puts are going to make you a substantially larger amount as far as percentage gains. So you do want to own some given specific circumstances in the market. So getting different strike, various strikes is a great strategy. Just don't go and buy a ton of stuff out of the money, because in most of the cases that is going to be a lower probability trade. Number 4, don't trade indexes using directional options. So maybe you had a situation, you watched the panic video and you're like, oh man, I'm going to go and just buy a ton of SPY puts. Guys, you don't hear me talk a lot about SPY puts in the videos. You never hear me talk about trading indexes. Why? Because the opportunity is always better by trading some of the individual stocks. Okay, and I'm going to explain you what I mean in just a second. So this is very, very important point, guys. Okay, here's the thing. Take a look at S&P 500. Look, it's barely moving, right? It's pretty much doing nothing over the course of the last 2 weeks. It's just going sideways. It's between 28.90, 29.10. It's just sitting there. Now, how does that compare, okay, in relation to some of the sectors? Now look at, for example, semiconductor sector. It's moving high like crazy, okay, while the market is doing what? Nothing. So if some of the stocks are moving high like crazy, then why is the market not moving higher? Well, because you have sectors like this, right? Because you have sectors like this that are moving lower. So if you're trading SPY puts, okay, look, the opportunity is just not here. But if you switch to trading, especially, what we're talking about here, guys, to be specific, is trading directional options, right? So when you have this sideways environment, the opportunity is not there. So, if you watched the panic video and you're like, hey, I'm going to go buy a bunch of puts. Well, this is not, I didn't say in the panic video, oh, go load up on SPY puts. I didn't say that, okay? But some of you interpreted it that way and ended up doing that, but that's not what I was saying. I was saying, look, we're seeing some signs off the top. It makes sense to be a bear here rather than a bull. And the next thing, once you have that information, is to understand which sectors do you actually want to short. So clearly, I'm going to give you a very good secret here, which I talk a lot about in the Trade Like a Rockstar course. So if you guys are looking to learn more information about how to trade earnings, how to make correlational observations that help you put some of the best earnings trades together, click the link below, take Trade Like a Rockstar course. It's 7 hours of crazy material to help you trade the earnings. So AVGO, if you take a look at all the other semiconductor stocks, you will see similar developments on the chart. So you don't want to be short in a sector where every freaking stock has the same chart, bullish chart like this. You want to stay out of it until you do what? Until you see the chart looking just like the charts I was showing you in the beginning of this video. The top informations. Does this look like a top information? No. It does look, however, like one of the top chart patterns we describe in our charts divergences course, which is the loss of momentum. This momentum will not be able to last forever. But we don't have enough data right now to just say, hey, let me just go ahead and short the hell out of this thing right now. Okay, so that is not the case. The idea is this: you don't want to go against the sector where all the stocks are incredibly bullish and they have incredibly bullish charts. You want to wait for certain things to happen in the chart before you would actually bet against the sector. Now, the second chart right here is unanimously all the stocks in the healthcare sector are dropping like a rock. So when you hear me say panic, okay, hey, this means identify specific sectors that are going to give you a high probability. If the entire sector is selling off, guys, that's going to make it for a high probability trade. You can pull up any healthcare stock, right? It's going to resemble this. We've nailed the top here. We're saying, look, the next stop is in the cloud stocks. And there's actually another sector we're going to talk about in one of the future videos here shortly, where we're observing another top information. But just be patient, because this market will test you. So don't just expect the moment you get into the trade for the trade to go automatically in the direction you expected. This market is putting quite a bit of a fight, but your odds are going to be much higher. Trading stocks, identifying the sector, shorting individual stocks, not the indexes right now. This is not the time to, buy SPY puts or buy SPY calls. Can you make a little bit of money on that once the bigger move comes? Yes. And actually, there is a high probability based on all the 13 market moves, for instance, that we will get a gap down tomorrow on Thursday in the markets. But again, your strategy should be shorting these stocks on the bounces. So you have identified the sector. When these things move higher, you short them. I specifically posted a breakdown on this UNH trade, I guess, a day ago or so. So key takeaways are this, guys. Do not trade indexes in low VIX environment, especially short-term time frames. Number two, identify sectors where institutional behavior is the same across the number of stocks and trade in the direction of where institutional money is going. Number three, pick the best stocks for options within that sector. If you're not sure how to do that, click the links below and get more information. Okay, guys, this is some awesome trading environment we're fixing to roll into. So get the information now so you can be the most successful trader you can be over the course of this earnings season. Take action. Let's roll. Let's find these awesome trades. And let's set some trading records this season. I'll catch you in the next video.